This is an interesting consideration for equities. We have seen earnings estimates declining for the last probably since last fall for 2025 and 2026. You can see here on the right side of this chart, those expectations have now started to level off and actually tick slightly higher. This is not the best market timing tool, but it does act as a headwind or tailwind to equities. When you see analyst revisions and earnings expectations falling, typically you see the S&P follow suit, and conversely, when expectations are rising, it does tend to support a bull market. So we're closely watching these measures, and if they potentially bottom, that's another reason to be optimistic around the path for equities going forward. Where there has been divergence in the expectations is really between the large growth segment and the large value segment. The large growth segment, a lot of which is made up of the Magnificent Seven stocks, is actually holding up very well. They posted a very strong first quarter of earnings growth. If you look at the value segment, those expectations continue to get cut. And this is one reason why we think market breadth and we might see greater concentration in the market going forward is because as those earnings expectations continue to gravitate around the growthier names, it just presents a bit of a challenge to the sort of broadening out of market performance.